Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City and Tulsa, where we do investment real estate for residential investors. I want to talk about interest rates here just a bit. It has been nuts. You go back to September of last year when the Fed lowered rates 50 basis points and rates looked really, really good. Then they have been whipsawing like crazy ever since. In fact, that is something we just recently encountered. Now, a lot of this has to do with, are we deporting all these people? Are we going to do these tariffs or not? Which I'm going to deal with later. But, it has caused the bond market, the treasuries, to really kind of be crazy. So, for instance, a week ago, everything was looking good. And we were down with an interest rate buy down to 5.75%, even 5.625% for investors with a 30-year fixed interest rate loan. Well, then this on again, off again thing with tariffs, among other things, just drove the market crazy. And it's, you've got people worldwide that are buying treasuries. And so, if they have no faith and confidence in what's going on, no consistency, nothing that's predictable, they're not necessarily going to invest. And so we went at an interest rate from 5.75% to 6.375%. And that is a huge change in about 1 week. Now, here's the other thing though, is we've had some numbers come in that are really, really good that should support the bond market. One of which is inflation's looking really, really good. And a lot of it has to do with the fact that now all of a sudden the tariffs are kind of off the table. And so the inflation outlook is very, very positive. That's number one. Number two, you have these quarterly auctions for treasuries. We have to support the government. This is what people buying dollars basically does. And so it was a good auction. And so everything should be just fine, but it wasn't. The market went up anyway. Now, the way things are going, and by the way, when I'm doing this video, then the administration just announced that, well, there'll be no tariffs on phones or no tariffs on electronics. So your $300 TV is not going to go to $1,000 now in terms of what these tariffs would have done or more because they come out of China. And so we should have some positive news at this point. Now, by saying that, I'm saying that the markets are going to react in a rational fashion. And normally, when you look at treasuries, look at the bond market, they are the adults in the room. But if they're saying we're going up to 5% versus below 4%, they're telling us something at this point. They want to see some consistent policy. If that happens, and I hope it does happen because we're starting to see these tariffs just kind of go away, then what we're going to have is stability. And with that stability, we're going to have those rates going back down again. And that's what's extremely important. Nothing to do with the Fed Reserve. I mean, they are not even intervening in any particular way. This is also a crisis of confidence. Also remember that consumers are really negative at this point. All this should point next week to lower market rates.